of an intangible asset. But nobody lowers the value of their brand marks. What has been happening, and MicroStrategy is a prime example, is the Bitcoin that MicroStrategy owns was booked as an intangible asset. And when the price declined, there was impairments to that value.
Right.
Right. So this means that if the price of Bitcoin goes back up, the accounting rules make it extremely difficult to revalue that asset higher. That's what fair value accounting is for, right? You don't do that with intangible assets. Another example of an intangible asset, and it's probably the largest example on a balance sheet, and that is something called goodwill.
Right.
So what is goodwill? In the case of, for instance, a merger between two companies, goodwill is the price or the value over and above the net tangible book value of the company that you're buying. So if you buy the company, if you acquire a company for $1 billion,
right,
and its stockholders' equity is, let's say, $250 million, right? The value is attributable to total assets minus total liabilities plus the goodwill, right? Total assets, which includes goodwill,
okay,
right? And when you combine those two balance sheets together post-merger, that goodwill is now on the balance sheet of the surviving entity. It's essentially, and I want to try to say this in a sensitive way, it's the price some dope overpaid for an asset. No,
but there's no real sort of way to kind of value it.
No, well, look, if the price of a stock is $100, right?
Yeah.
And let's say there's 10 million shares outstanding, right?
Yeah.
Got $1 billion market cap. And then a suitor makes an offer to buy it for $200 a share.
Right.
And so what ends up happening is the goodwill is the difference between the price paid.
Got it.
The price, the net tangible book value, right? And the price that you actually paid. Net tangible book value is total assets minus total liabilities minus goodwill.
I see.
Right?
Okay.
So goodwill is a large chunk of a balance sheet, right? I always say, by the time you pay somebody to dissolve, the hammer value, liquidation value of a company is always less than its market value, right? Which, when I say hammer value, it's important to understand, right? If we dissolved it today, sold all of its assets, paid off all of its liabilities, right?
Right.
Yeah.
So intangible assets didn't make sense for digital assets or digital cryptocurrency in this case, because if the market's going up or down and MicroStrategy on the books, it looks like it's valued less. So they weren't able to sort of adjust it on as the market adjusts.
They can adjust it downward, but Tesla did something in the last year.
Yeah.
And that's another example, right? Tesla bought $1.5 billion worth of Bitcoin. Everybody remembers that.
Right.
They also sold $272 million worth in March of the same year, and it occurred in the same reporting period.
Okay, it's the same quarter, right?
Correct. Now, they sold $272 million worth at a profit.
I see. But on the books,
hold on a second. There was a gain on the sale of the 272 million that they got for that portion of the Bitcoin, right?
Because Bitcoin had gone up in that period.
It had gone up. It went up. That's correct.
Okay.
Now, they used it as a basis to adjust the value upward, but they couldn't get the whole value onto the balance sheet because you can't, again, it's extremely difficult to revalue an intangible asset. But when you sell a portion of the same asset, there are tricks that you can play. But that was, could have been a once in a lifetime thing. You never know because they bought it cheap. It went up. They sold some.
Yeah.
Right.
Yeah.
They booked the gain and played a little game that allowed them the leeway to revalue that asset in their books. But that doesn't happen all the time.
Right.
It was a freak thing during a bull market that, took the price of Bitcoin up in the same period, sufficiently enough for them to sell a portion of it, right? So, but in MicroStrategy's case, MicroStrategy is a traditional entity that holds 90% of 90% of its assets are Bitcoin.
Okay.
Bitcoin is an open ledger based asset. If it moves,
Right.
you can see it on the blockchain, right?
Yeah. Yeah.
And then to make matters more complex, the traditional entity holding an open ledger based asset is shrouded behind a periodic disclosure framework.
Right.
Right.
Every quarter.
Correct. Every quarter they make their disclosures. We're on the Bitcoin blockchain.
It's real time.
It's real time, right? It's real time.
Right.
So in MicroStrategy's case, the difference between booking Bitcoin and most other liquid digital assets, Ethereum, Cardano, even Ripple,
right?
Most of the ones that are immediately convertible into cash,
right?
There's nothing intangible about Bitcoin. The truth is, here in Switzerland, it's treated as a current asset, the way a marketable security is, right?
Right.
If you can immediately convert it into cash, it's part of your current assets, right? Treasury bills, treasury bonds are immediately convertible into cash. Other securities, short-term instruments are immediately convertible into cash. Cash itself is a current asset, right? Bitcoin, under the new proposed rules, allows you to do fair market accounting, which means you can remarket higher if it goes higher. And that will allow a company like MicroStrategy to disclose more accurately the underlying value of all of their assets on their balance sheet, right?
Yeah.
And they'll describe the accounting policy and the accounting pronouncement, the accounting rule that they use to apply that fair value accounting methodology, right? They'll disclose all this in their 10Ks and
right. Doesn't that just basically, just for the rest of us, just regular layman folks, doesn't that just mean whatever the current price is on the market, or whatever somebody's willing to pay for it?
Well, the market price is what somebody else is willing to pay for it.
Okay, I mean, is there a reason why they call it fair value? Like, why isn't it just the market price?
Fair value accounting is an assertion by management that values an asset.
Okay.
Okay. Now, how do they make that assertion? Well, they make a determination. How do they determine it? They look at the market price and they look at a variety of market centers, right? Venues where it trades, right? They may look on Coinbase, they may look on several other exchanges and determine the value. But keep in mind, Bitcoin is a highly liquid asset.
Yeah.
It trades billions and billions of dollars worth of Bitcoin in volume every single day. And if I wanted to sell 500 million or $1 billion worth, I can do it in a relatively short period of time, either direct market sales or over-the-counter transactions, right?
Got it.